Welcome back.
I'm Nick Shivers.
And I'm Keegan Shivers, and this is the Shivers Report, where you get the most up-to-date real estate information
in the world,
and more specifically in the Pacific Northwest. So initially when we got into the conflict in the Middle East, it was supposed to be a short, quick, easy process.
Yeah.
And it's been anything but that.
Exactly.
And we're still in it. I don't know how many days. How many days have we been in it now?
49?
49 days. And I think one of the biggest headlines that came out this last week was Trump saying, don't expect oil prices, gas prices, anything like that to really come down until midterms.
Yeah.
And that's a big, big statement coming from the president of the United States with midterms coming up.
Yes.
That has a lot of effect across the nation. What do you think the plan is?
Well, I mean, again, I don't know. I don't know if anybody there's
Trump might not even know.
There's a speculation. I mean, nobody knows. But what we know now is we're seeing it in the data for real estate.
Yeah.
We're seeing it in mortgage applications.
Yep.
Mortgage applications are down year over year. We're seeing it in new listings for the first time in a long time, where we're seeing less properties hitting the market. Inventory is actually coming down a little bit, even though properties are staying on the market longer because of the amount of people putting their homes on the market. So, we have not seen the full effect of inflation. I was talking to a chemical broker, and he goes, people call me up and say, I don't care what the price is. If you can get me the chemicals, I need them. And he's like, it's like heyday. So it has definitely affected the spring market. First 3 months of the year, specifically in the Pacific Northwest. Remember, real estate's hyper local, but the first 3 months, it was 2026. We had our best 3 months of listing activity, meaning how many listings we've taken. Was the first quarter of 2026 was the best in the history of our company.
Not only just the quarter alone, but January was a record, February was a record, and March was a record.
Exactly. And then now we're trending below 2025 numbers.
Yeah.
So, and now it's in the data. We're seeing it has affected the market. Uncertainty. The good news is interest rates. Where are they right now today?
6.32%.
With all this volatility.
With all the it's interesting because we saw some pretty hefty jumps when we first started with this. And there's been some pretty big headlines that have come out recently. And instead of going up, it's come down. I think people are starting to look through the BS a little bit more of not falling for the boy who cried wolf a little bit.
Right.
Just where every headline comes out, we see an effect in interest rates that people are kind of more looking for something to actually happen before there's any adjustment on that side of things.
I think we do have to hug, like Logan Motoshami says, hug your mortgage spread. Because if we looked at mortgage spread, because remember, the 10-year and the 30-year is a little dance, but there is a spread between
the two.
And right now, if it was like 2025 or 2024 or 2023, we'd be in the sevens. So, I mean, 6.3 is a great interest rate, and that should keep the market from really slowing down, because it's slowed down, no doubt, across the board. There are some neighborhoods that are still screaming and doing great, but we are definitely seeing a slowdown in the market.
Yeah, and the interesting thing about this war is just it's a different war, because usually when you go into a war, interest rates come down a little bit because it's a flight to safety is the bonds.
Right.
But because of the war and the oil piece of it, with inflation going up, investors aren't comfortable with putting their money in bonds, because with inflation going up, that's their money isn't making money at that point.
Their money's not making money, and that's so it is it's not a war that is very popular, and I think there is like I wouldn't surprise me that if our president even if he doesn't get what he can get, he's just going to say he won and back out because the economy is, people wanted, he got elected for border and economy. And right now the economy is going south.
Yeah. And with that, I mean, also he talks about interest rates, affordable housing. And for a lot of people, we're sitting here thinking this last year, 2026. It's kind of like what we were talking about in 2024, about 2025.
Yeah.
Same thing, 2025 to 2026. Yeah. This pops up. And it's just a little bit interesting because there's a lot on the line with midterms this year. And there's a lot of big decisions that are to be made. And the sentiment out there with where we're at in this war right now is some people they aren't happy with the decisions. And the effects that maybe it's had on the economy.
Yeah. And one thing I think we should address, and I made that comment that the economy, but I think it's the middle class economy that's getting smashed.
Yeah.
Stock market's at the all-time high.
Yep.
Home values haven't plummeted. But the middle class is feeling it. It's feeling it at the pump. It's gonna here soon. They're gonna feel it in food, and that middle class was a big voting tool for the current administration, and they're losing it.
How long do you think we're really going to see the effects of the inflation that is to come? But not only with gas, because we saw that pretty quick.
Right.
But food, those type of costs.
I believe that we have a delay. Even if the war ended today, I believe we will see this inflation for the next 3 to 6 months. Even if the war stopped today, and I've been in economics and investment for 25, 30 years, and things change quicker than with just a comment now. So sometimes it's like, what?
Yeah. So depending on how long this lasts, do you think there's a cutoff that we need to be done with this conflict if we want to see any big adjustments in the real estate housing market for the rest of 2026? Or do you think everybody's kind of priced that in right now?
I think we've already priced it in. I think 2026 is, I think it won't be as good as 2025. If things got really bad and interest rates went up, then I think we could see some issues.
Yeah.
I think we're going to be in that 23, 24, 25 range.
Yep.
Like, 4 million has been like a tough range, and it's going to be that 3.8 to 4 million across the board.
Which is interesting because we're sitting at better rates than we were last year.
Yes.
But it seems to be all because of that uncertainty for people, where they don't know what's going to happen the next day, the next week, the next month.
Right.
Which puts people on edge a little bit more than we're used to.
Yeah. So, I expect a very similar year to 25, 24, 23.
Got to keep grinding.
Thanks
for tuning in to the Shivers Report. If you have any questions about real estate, we have you covered.
We're out.